Well, 2025 is only hours away, and soon we'll be talking about the deadline to file your tax returns. In fact, it's never too late or too early to be thinking about that, right, Bill?
Absolutely. You should be thinking about it right now, in fact. Shane Stevenson, he is a financial advisor at Winston & Company's Retirement and Financial Services, and he joins us now on Arizona's Morning News. You know, Shane, what should people be aware of before they file their taxes at this point?
Well, there's three big changes that we're kind of wanting to mention. The first one is what's called third-party payment threshold. So this is if you use apps like PayPal, Venmo, you sell things on eBay, you're a small business owner. There's big changes that have happened. For 2024, $5,000 is the limit. So if you bring in more than $5,000, all of a sudden these apps are going to start generating 1099-K forms. They're going to detail the amounts of potential reportable income or transactions. So huge change. For 2026, it drops to only $2,500. 2026, only $600. So really, really massive changes there for small business owners or even friends that just transfer money back and forth.
Well, what
Second
about...
big thing,
Oh, go ahead.
Second big change is what we have for standard deductions. Now, of course, these things reduce your taxable income so that there's less money for your reporting. But again, for 2025, those are changing. $14,600 for single filers, $29,200 for married filing jointly folks. Last big change is the tax brackets. Of course, every year the IRS changes these things for inflation, but this year we're seeing each bracket go up by just about 5.4% from 2023. Now, keep in mind, it's possible your tax bracket could actually change without your income changing, so double check. And on our website, winstonandcompanies.com, have a great link to an IRS page about tax brackets to help you get this right come tax season.
So I understand if you also claim mileage normally for work, that's going to go up next year, right?
I believe that's going up slightly. You want to double check with your tax professional to make sure you can write that off in the best way possible.
And a reminder to folks here in Arizona that our state offers dollar-for-dollar tax credits for donations to many charities across the state. You actually will get whatever you donate back up to a certain amount, dollar for dollar, as credit on your state taxes. So that's good to know. Tell me about, for people who have children or, like me, an adult dependent.
Well, a couple big tax credits you can take advantage of for things like that. So people who qualify for that child tax credit could receive $2,000 per child. This remains unchanged from 2023. A couple other credits, like you mentioned, workers with low or moderate incomes could qualify for what's called the Earned Income Tax Credit, where some families can claim some credits for children and the like. Those who have children and other dependent care issues can go ahead and use the Child and Dependent Care Credit, which allows working parents to write off up to 35% of employment-related expenses to help offset the cost of care. And those who purchased an electric vehicle in 2023 and 2024 can also take advantage of an EV tax credit.
You know, Shane, we're all trying to figure out how to lower our tax burden. Now, as I sit here right now, what can I do as I look forward?
It's the final day of 2024. Is there anything we can do today
I know,
to lower
we're kind of
it,
limited because it's the last day, right? But
right.
there are a few things you can do. The biggest thing we always want to try to do is keep ourselves out of the way of taxes, right? And by doing that, we get ourselves into things like Roth IRAs, and we still have plenty of time to contribute to a Roth IRA because we can do that up until tax day. For those of us that are 50 and older, that's $8,000 for the year, while everyone else is $7,000. But the biggest thing I want to stress is really just do that. Make those contributions. Start saving for your retirement in a tax-efficient way, because you'd be really shocked at how many people just don't understand the importance of starting to save for retirement. I want to make sure that you're saving at least 10 to 15% of your income towards retirement, because, again, saving early and often helps you take advantage of the power of compounding interest and just making sure that your money's working for you, but also that you're saving, because you can't do one or the other. You have to do both together.
All right. Thank you so much. That is Shane Stevenson. Some good advice there. Financial advisor at Winston & Company's Retirement and Financial Services.
Thanks for watching Arizona's Morning News. Click to watch more from KTAR News and hit the button in the middle to subscribe.